All right. What is up, traders? What's up, tycoons? Super excited for today's video. The equities for rising rates ETF continues to rise. What does this mean for the market, especially ahead of the upcoming FOMC meeting? We're going to break down all of that in today's video. And what we're going to do is we're going to take a look at commodities. Okay. If you take a look at commodities via this ratio chart here, or you take a look at the commodity index fund right here itself, we see signs that it's potentially about to break out. Okay, there's lots of different charts that you can look at. We're going to compare this to CPI and give you guys the relationship that commodities have with CPI and with inflation, why that's so important. And then we'll just take a look at a couple commodities charts, right? This is corn futures right here. We've got soybean futures. We've got live cattle futures. And then, of course, we've got crude oil, okay? Energy and oil, is a really big part of inflation, okay? And lots of time, if you see energy ticking up, okay, that spills over into other areas of inflation because of higher transportation costs, usually will result in a higher cost of the product or good or service being provided. Then we'll go ahead and take a look, and the market currently is pricing in rate cuts in June, okay? They're pricing in rate cuts in June right now. And, at the end of the day, this chart right here, while it may not be the best example, I've shown some better ones on Thinkorswim. This chart gives you a timeline and lets you know when you can actually expect Fed rate cuts, right? And I'll break it down what it is that we're looking at in this chart, but this is the one that provides the signal, okay? Ultimately, everything else is mostly speculation, and this chart has a very good track record of predicting when we're actually about to get rate cuts. We'll break down all of that in today's video, but as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I started a completely free newsletter for you guys. It's called Investment Intelligence, giving out free, valuable finance trading content related to the markets. And I also try to sprinkle in some free trade ideas in there. This week, I'm going to be putting out a piece similar to this video, but I'm going to be including some other pieces in here that, aren't necessarily in this video that I've covered on some previous videos. So you can look forward to that dropping later this week. There is a website associated with it. So before you sign up, you can just check out the website. It's kind of a blog format and read some of the previous articles. And you can keep up with the newsletter via the website. Or if it's something that you feel like you want sent directly to your inbox, you can sign up for that and get it sent straight to your email. Right. And I also have the Investment Intelligence Discord. That's where I'm posting over 20 plus swing trade ideas every single week. Lots of different plays, lots of different analysis. There's custom scripts and indicators that I use in there, as well as valuable resources such as being able to see gamma levels, dark pool levels, and many more. Here's what some of the trade ideas have looked like in the past. Just basically showing you guys the chart conditions, chart patterns, highlighting it, and you can see how some of these plays have worked out very well. Anytime I spot large order blocks as well, like Intel had one a couple weeks ago, almost 1.5 million shares. Plus, it was testing this key zone here that we had retested about 5 times, and that Intel play turned out very good. So sign up for that. Link is in the description, okay? Now, this is the EQRR, okay? Ticker symbol EQRR. And what this is this is the ProShares ETF for the equities for rising rates. And so typically you're going to see this going up in a rising rate environment. And look at this massive breakout that we've had. This ETF has been almost going up in a straight line. Meanwhile, you have stocks like Apple, you have stocks like Tesla, can't catch a bid, right? So we're seeing some of the big Magnificent Seven stocks really underperforming the overall S&P 500. And then you've got EQRR here, the equities for rising rates ETF, just going up in a big, big way, in a big fashion. And so the market is always sending you a message. And it's really a matter of, are you paying attention to the message? Or maybe you're not even looking in the right places of the market to see some of these messages. And we're seeing this EQRR, this rising rates ETF, just go ballistic right now. And so to me, that kind of suggests that the market is hinting or suggesting or sending a message that, hey, we could be in a period where we're actually going to be seeing rising rates. Now, I'm not talking about the Fed funds rate, okay? It is always possible that the Fed may hike again, right, rather than pause or cut. But more importantly, I'm speaking about treasury yields, okay? And so it's very possible that this ETF is suggesting to us that, hey, we could potentially be seeing, or at least this ETF is anticipating, rising rates in treasury yields, right? So think of your 10-year treasury yield, right? Think of your 2-year, your 3-year, 3-month, think of, your 30-year, right? There's lots of different rates that you can speak of. But if that's going to be a clue, well, is there anything to back it up, right? That's what I want to know. And so commodities, okay, obviously they're going to be a big part of inflation. And so when you look at this ratio chart here of the DBC, which is your commodity index, divided by the SPY, so when this chart is going up, it means that commodities are outperforming the S&P 500, outperforming the stock market. We're in a similar phase to what we were last year during the summer, okay, where commodities bottomed and broke out of a downtrend and then continued this 3 to 4 month period here and really bottomed out or topped out near the stock market lows in October of 2023. Okay, that's right around in through this period here, right? This is the very beginning of November, end of October, right in this period here where we top out. Coincidentally, that's also where the stock market tended to bottom here recently. And what do we see again? Well, we see it breaking out of a recent downtrend, and it appears to be putting in a bottom. If this is going to continue going higher, it's very possible that this could lead potentially to some higher inflation reports. Okay. And when you take a look at the DBC itself, this looks like a very nice little double bottom to me, right? I mean, you can call it a sloppy double bottom with a bottom here and another bottom here, or even a sloppy triple bottom breaking through the neckline. And we're approaching the first target here, which is going to be 2316. Above 2316, you're looking at 2410. But overall, this is just a nice base, right? This is a nice base. Okay, we broke through the shelf of resistance that we had here, and it seems like we're trying to attempt a further breakout of this downtrend and get above that 2316 level. If we get above 2316 and head up towards 2410, that just means overall commodity prices are going higher. And again, when you look at this is the SPY divided by DBC now. So instead of DBC divided by SPY, it's the opposite. And what do you see? Well, you see the SPY was outperforming commodities here, and we've just broken that trend and appear to be topping out. If this chart is going to start a downtrend again, that's going to suggest that commodities are going to start outperforming the stock market. And so when you look in their relationship that they have with CPI, okay, so we've got CPI in white here and then the DBC in red. Remember this, CPI is a lagging indicator, all right? So if we're seeing stuff right now, potentially breaking out, and let's say that commodities run for the next few weeks or even the next few months, right? It's not going to show up in the next CPI report, okay? CPI is a month behind, right? So, the next CPI report we get is going to be, the previous month's data. So if these things run for a couple months, it's going to take, 3-4 months for it to show up in the CPI data, right? And it's very evident, right? You can see commodities topping out here. And then where do you see the actual CPI topping out? It's afterwards, right? It's afterwards because CPI is lagging, okay? CPI is lagging. Remember that. You see again over here, it tops out over here, and then we see CPI top out over here, right? So oftentimes, even right here, right, you see commodities top out and then CPI tops out afterwards. So this is not something that's going to possibly show up in the next inflation report. It's probably, if we see this breakout, it's going to show up in the next 2, 3, maybe potentially even 4 inflation reports, just depending on how much room that this commodity breakout has to it and how much legs it has to it if commodities actually do continue to break out. And again, when you look at some individual commodities, right, you look at corn futures. I mean, this is almost a textbook inverse head and shoulders setting up. I mean, it broke the downtrend already. And, it appears to be trying to attempt to hold this key level here. But even if we were to pull back and consolidate a little bit more, that's going to even give us an even cleaner head and shoulder setup, inverse head and shoulder setup, right? If we were to consolidate here a little bit more and then break out, so that's something that you want to keep in mind, right? If we start to see all these commodity charts that have bullish setups, this is soybean futures right here. You could say this is an inverse head and shoulders as well. Right, we're not trying to get too fancy on the charts here, but very nice base here building at least. If this breaks up above 1192, it looks like soybean futures can break out from this downtrend that it tested once, twice, thrice. The more times you test the level, the weaker it's get. And boom, this could potentially start to break out, right? Then you take a look at live cattle futures. Live cattle futures have been on a very nice uptrend, right? It's broken out from previous supply, and it's really just been breaking out, retesting, consolidating above its old previous highs, right? We can see we're above the old previous highs here of 187.5, and that's bullish, right? Now, there is some bearish divergence right here. We did have a bearish crossover on the MACD, so maybe if live cattle futures can start to spill over and we see this break its uptrend, and we see some of these results in false breakouts, then maybe we don't have too much to worry about as far as commodities potentially impacting future inflation reports. But if a lot of these charts bullish setups are going to continue playing out, and we're going to see further breakouts from some of these, and we're going to see live cattle futures go up, and then you throw on top of that oil, which had an initial false breakout, right? And false moves often lead to fast moves. And that's exactly what we saw, right? We saw the false breakout here and then a very fast move to the downside. Now we're attempting to break out again potentially here. And we're trading right in a key zone. But if oil futures get above 85 and we're heading to 89 and then above there, 105 is the next target, right? If oil futures are trading at $89 and heading towards 105, what do you think that's going to do for inflation? Now remember, this is not all going to happen in the coming days and in the coming weeks. These are going to take time to progress, right? Most likely a few weeks to a few months for these breakouts to truly reach their potential if they are going to be sustained breakouts and not false breakouts, okay? And why is that important? Well, again, we're at the end of March right now. We've got April, May, and then the third month away is June. If CPI is a lagging indicator, what does that mean for the June report if we see a breakout over the next 2 months in some of these commodities, right? Well, it means that in the June inflation report, in the June CPI report, this is when all of these breakouts and all of these higher prices and all of these different commodities are going to show up. Okay, this is going to be very important. And this is one of the main things that you want to pay attention to tomorrow when listening to the Fed and Jerome Powell and, trying to dive into their SEP. You want to see what are they saying about June and what are they saying about inflation. One of the last times that we had Jerome Powell talk, he was saying that, hey, it's okay if CPI doesn't come in lower and below expectations every single time, as long as it's staying in line, right? And as long as we're not seeing, an acceleration. But if we start to see commodities and oil and energy really break out over the next 2 to 3 months, that could lead to an acceleration, the exact acceleration that Jerome Powell does not want to see in the inflation report and in CPI data. Right now, we've got about 60% odds that the Fed is going to make at least one cut in June. And, this could throw a whole wrench in the June cut cycle. Okay. Is if this happens and we start to see this, the Fed may push rate cuts out even further. Okay. Now, this doesn't have to mean that the stock market has to completely crash and go to zero. Okay. We've seen that, the Fed rate cuts initially in the beginning of the year, where we thought, the market was pricing them in as early as March or April. And now it's been postponed to June as we've gone through the first quarter. And the stock market has not tanked, right? Honestly, it's done the opposite and it's just continued to melt up higher. So it's not a doom and gloom situation, but there's different things you need to think about, right? The bond market is much different than the stock market. And so if you're someone who's playing something like TLT, this is something that you need to consider, right? And maybe perhaps even hedge yourself with. If you're anticipating rate cuts in June and those June cuts don't come, well, that's most likely going to result in a negative impact on the TLT price, being that we're going to see higher rates for longer. And maybe this is why in the very beginning of the video, I went over the EQRR ETF, because that was the equities for rising rates ETF, which is an ETF that typically goes up in a rising rate environment. So the whole thesis behind this video and the whole reason we dove into this was because the market was sending us a message in one area, suggesting that potentially rates could go higher. So how can we figure out potentially if rates can go higher? Well, we dive underneath the surface like we did in today's video, and commodities are one of the factors that really impact inflation and impact the CPI report. And as we just went through in today's video, lots of those appear to be putting in a bottom and potentially breaking out. If we see sustained breakouts in those, well, then maybe the EQRR ETF was actually giving us a little bit of a warning sign and letting us know ahead of time that, hey, we may not get those June rate cuts that everyone is anticipating. Okay. Now, at the end of the day, this video is a lot of ifs. Okay. It's a lot of if oil can continue to break out, if soybean futures, if live cattle, if commodities do this. So, you have to take everything with a grain of salt, but you want to dive deeper than just what everyone else is doing, right? You want to do due diligence, and that's what I try to do on this channel. So hopefully you guys enjoyed today's video. Before we go, we're going to leave you guys with one special chart. And this is the yield curve in white, and then we've got the Fed funds rate in red. Okay. And the Fed does not cut rates until the yield curve is uninverted. And it's really just that simple, guys. That's when we see it. Okay. It's not like some magic thing I'm making up, right? That's just literally what we've seen from the past. Okay. You look at this time period here where we get above the yellow line, and that's exactly when the Fed starts cutting rates. Okay. You take a look over here, we come back to the yellow line. So the yield curve is not inverted anymore. That's when we're starting to see the Fed cut rates, right? Over here, same thing. What are we seeing? Well, we come up to the yellow line, yield curve is uninverted, Fed starts cutting rates, right? Same thing over here. We hit the yellow line, yield curve is uninverted. That's when we start seeing Fed cut rates, right? And look at where we're at right now. The yield curve is lower than where it was just a few months ago, right? So it's more inverted than what it was previously. The yield curve is going to have to get back up towards 0% before we can realistically expect any type of rate cuts, and we're just not there yet. So maybe if the yield curve uninverts itself within the next 2 to 3 months by June, well, then maybe we can say and start to expect rate cuts towards June. But keep a close eye on the yield curve. If the yield curve is continuing to go down or it's flatlining and really just trading sideways, unless we see an acceleration in the re-steepening of the yield curve and getting it uninverted, right? Getting it out of that inverted status, we're really not going to see rate cuts. And it's just that simple. And so I think that rather than using the CME watch tool to predict when we're going to get rate cuts, because that changes day to day, like one job report, one inflation report can come out and the numbers sway dramatically sometimes, right? And so it's really best to know what it is you want to actually look for when trying to anticipate Fed rate cuts. And the yield curve has been the best predictor. And once we see the yield curve approaching zero, right, getting ready to re-steepen and come out from that inverted status, that is likely when we get rate cuts historically, right? It's either right before, right, or it's either right after. And, that is the only signal really that I'm looking at as to when the Fed is going to cut rates. And to me, we're just not seeing any signs, right? The yield curve actually, inverted itself more. So to me, that's telling us that we're farther away from rate cuts than where we were just a few months ago. Okay. Now, all of this data changes, all of the time. So, you want to keep up with some of this data. You want to stay in the know-how. And hopefully you guys enjoyed today's video. And if you did, smash that like button, subscribe to the channel for more content just like this. Don't forget, you guys can join the Investment Intelligence Discord. That's where I post all my analysis, all my swing trades. These charts were posted, days ago before I recorded this video in the Discord for the Discord members. There's also custom scripts, indicators. You guys can see dark pool levels. You can see gamma levels. Many, many really cool resources available inside of there. And if you don't want to pay for anything, that's fine. I get that. I understand that. The Discord's only $10 a month. I try to make it affordable for the YouTube audience, but the newsletter is completely free. Okay. And I also try to provide valuable content on there for free as well. So you can sign up, for all of that using the links in the description. And if you ever want to do a one-on-one session, right? Let's say you enjoyed today's video and you've got a bunch of questions, right? Or maybe you want to go over some of the day trading dynamics or swing trading strategies that I use. Well, you can use my Ko-Fi page to reach out and click on the commissions tab. And in there, you can directly book a 30-minute or a 1-hour session and kind of just, leave me a message on there saying, hey, this is what I would like to go over. These are some of my questions. So that way I can prepare something personalized for you. They also have this cool little buy a coffee button. It's basically a way to leave a tip or donation for all the free valuable content I put out, such as these videos and the newsletters. Or You know, if you guys just want to request a specific YouTube video on the topic of your choice, you can do that as well on the Ko-Fi page. Click on the commissions tab and leave a message in there saying, hey, you know, can you cover this? And can you cover these specific points inside of this about this topic? I'd really love for you to do that. And I'd be happy to get to it as soon as I can. So thanks again for watching. All right. If you enjoyed today's video, most likely you're going to enjoy this next video here. So be sure to click on that one.